Welcome to Absolute Trust Talk with your host, Kirsten Howe. Absolute Trust Talk brings you tips, tools, advice, and interviews to help you build a reliable knowledge base on estate planning, business, and finance to start preparing for your future today.
Hello, and welcome to Absolute Trust Talk. I am Kirsten Howe. I'm the managing attorney at Absolute Trust Counsel. And here with me again today is Jessica Colbert, who's one of our associate attorneys. And every so often, we get a little cluster of cases in the office that all seem to have something in common, some problem in common that we have to pay attention to. You know, this is happening. This is something that people need to know about. And this is the subject of today's episode. And it might actually have to be 2 episodes because we have quite a bit to say about it. But we recently have gotten a bunch of cases in the office where the trustee, after a death, has been administering the trust for a year, maybe 2 years, maybe 6 years, and they've distributed most of the money out to the beneficiaries. And now they just want our help with some little problem or obstacle they've bumped up against, or they need our help closing the trust. I'm saying that in quotation marks because that's the kind of terminology they use. They don't know how to close the trust, how to get this job to the finish line. And a lot of times these trustees have done a fairly decent job of getting things done without our help, without the help of an attorney. It's not easy. It's a big job. It's not easy. It takes a lot of time to figure out what needs to be done if you're not an attorney. But mostly these trustees have managed. But when we meet with them, what we find is they are almost always surprised to learn that there are a few things, some responsibilities that they didn't take care of because they didn't know about it. And some of these steps are critically important. And that's what we're going to talk about today. The important point is it's not too late because in the cases I'm talking about, they haven't yet distributed all of the money out. So there's still the ability for them to fix their mistakes or their oversights. But, I just can't emphasize enough how important it is to check in with your attorney or an attorney before you give out the last of the money if you're a trustee. Because once it's gone, it's like toothpaste. You can't get it back into the tube. And then you don't have money to pay for the things that you were supposed to have done. And as we've said many times before, trustees can be personally liable for their mistakes as trustees. Unlike most jobs, if you have an employer and you make a mistake and it costs the employer money, that's part of the cost of doing business. You're not required to pay your employer back for the mistakes that you make. A trustee is. That is definitely a possibility. So we don't like to see that happen. So today we're going to talk about the 4 questions. We've distilled it down to 4 that we think a trustee needs to ask before they make their final distributions. And we're going to look at them one at a time. Jessica, why don't you start us off with one of these 4 questions?
One question is about income taxes. The trustee should ask, have I done everything that I'm supposed to do concerning income taxes? And of course, the decedent as an individual has to file one final tax return for the year of their date of death and pay any taxes that are owed. So the trustee will need to make sure that that individual tax return gets filed and any taxes paid. But in addition to that, a lot of trustees don't realize that the trust becomes a taxpayer when the trust becomes irrevocable. And that happens when the grantor, the person who created the trust, dies. So now the trust is irrevocable. It is a taxpayer. It has its own taxpayer identification number, and it has to file its own set of state and federal tax returns every year until the trust is terminated. And on these returns, the trustee is going to report any income that the trust earns. And that could be from dividends, interest, rental income for any properties owned by the trust. And this will all get declared on Form 1041. And that is different than the individual Form 1040. And it's something that we don't recommend trustees try to do themselves, this Form 1041. And we always recommend that they hire a CPA to help them with that. Because, Kirsten, like you just said, the trustee can be personally liable if they make any mistakes on that.
Yeah, and you definitely don't want to mess up and make your mistake in front of the IRS. That's
right.
the worst kind of mistake that you can make. So hire a CPA who has experience with these. Not all of them do it. Not all of them do trust income tax returns, but find a good one and get it done by a professional. And also, tax preparation costs money. You got to hire a CPA and you have to actually pay them. So it's important to get all of this done before you've given all the money to the beneficiaries. Plus, maybe the trust is going to owe taxes. So you need to find that out. You need to know exactly where you stand before the beneficiaries get all the money. All right. The second question also relates to taxes. The second of our 4 questions is there a supplemental property tax bill coming?
Maybe. When there is a change in ownership in real estate in California, like upon death, a property is transferring from the decedent to someone else. Unless that transfer falls under a specific exception, the property taxes will be reassessed.
Meaning they'll go up.
Yes.
Never seen them go down. Never seen them go down.
They will go up. So if you are a trustee and you know that the transfer didn't fall under one of these specific exceptions, but your property tax bill didn't go up, it's very possible that the assessor is just behind in their paperwork and hasn't gone to it yet. It's not a miracle. It's not a present. You will very likely get a bill later on for that increased value.
Right. So you need to factor that in when you're thinking, okay, now I'm ready to distribute all the money I have left in my trustee checking account. Not until that supplemental tax bill hits. You just got to hang on to what we would call a reserve. And that's very important.
All right. A third question is, do I need to do an accounting to the beneficiaries?
Yes. Very good point. A lot of trustees, it seems kind of logical, but I mean, that's logical to us because it's what we do every day. But an accounting, just for those of you who aren't familiar with this concept, the vast majority of the listening public, an accounting is a report that the trustee makes to the beneficiaries that basically is the story of what they've been doing for the last year or 2 years or 6 years, whatever it is. They show to the beneficiaries, this is what I started with. These are all the assets I had and what they were worth on the date of death. This is all the income that was earned by these assets since I've been in control. These are all the expenses that I had. And now this is what I have left. There's other things in there, very complicated technical things, but that's essentially what the accounting provides. And you've got to provide that to the beneficiaries unless the beneficiaries and the trustees are exactly the same people. So that's the rare exception where, no, you don't have to account to yourself. If you're the trustee and the sole beneficiary, you can disregard question number 3.
And it's really important not to skip this step because as the trustee, you could be sued by a beneficiary for anything that you did wrong or anything that they don't like until the end of time or until you provide the beneficiary with this accounting of your actions. By providing the accounting, that cuts your exposure to a lawsuit down to 3 years, or in some cases, if the trust has specific language allowing this, it'll cut the exposure down to 6 months.
Right. So that's statute of limitations for actions against the trustee, lawsuits against the trustee for things that they did wrong or just that the beneficiary doesn't like. The statute of limitations doesn't start to run until you produce this accounting. So you just close up the books and close the trust, walk away. 10 years from now, the beneficiary could come after you. So you want to close that down. And how you do that is by producing an accounting. Okay, so we've gone through 3 questions that we believe trustees need to ask themselves before they distribute the final amounts of money to the beneficiaries. We started this episode by saying there are 4, but we're running out of time. So we're going to hit that 4th one in our next episode. Jessica, thanks very much. And thank you all for listening and watching. And we look forward to connecting with you next time.
Thank you for joining us today for another episode of Absolute Trust Talk Live. If you enjoyed listening in, then don't forget to subscribe. You can find us on Apple Podcasts or wherever you may listen by searching Absolute Trust Talk. While you're there, we would also love for you to leave us a review. And then why not share your favorite episodes with family, friends, or colleagues too? You can find all of our shows and corresponding show notes by visiting absolutetrustcouncil.com. You'll also find a variety of other free resources, including our ebooks, videos, blogs, presentations, and more. If you need help with your estate planning or administration, we also offer a free discovery call to help get the process started. You can find more information on booking your session by visiting absolutetrustcouncil.com/scheduling. If you join us for the broadcast, you can submit questions during the show. But if not, don't worry. You can always get in touch with us by sending a quick message to info@absolutetrustcouncil.com. Thanks again for listening. We'll see you soon.
This podcast is not meant to take the place of legal advice from an attorney and does not create an attorney-client relationship. If you do have a legal question or issue, please consult with an attorney.